www.marketstrategy.com.
Hi, this is Chris again, looking at the upcoming Monday, August 18th trading session. In front of you, I have the very sparse economic calendar for the session. Truthfully, I'm having a hard time finding anything on this calendar that's really going to move the markets. Asia is absolutely dead as far as this is concerned. When you're talking about department store sales in Japan and Tokyo as being two of the first announcements, July property prices in China, really not a whole lot to move the market. Australia brings out the new motor vehicle sales numbers, really not a big deal either. Euro trade balance, we pretty much know what's going on in Europe, so that really shouldn't move the markets. Canadian, what is essentially their TIX number, really not a big deal either. Really, it isn't until we get to the U.S. housing market index, which could have a slight effect on the marketplace, the U.S. indices more than anything else. And as a result, we really probably won't have a whole lot from a fundamental perspective to worry about trading. So, that being the case, I expect this to be a very technically driven market for the day. The first chart I have before you is the pound dollar. You can see we rose above the 1.67 level during the day on Friday. Really, I still think there's pretty significant bearish pressure. What I'm looking for is some type of resistive candle to start selling. Don't have it yet. Would be very suspicious of any rallies that don't make it to 168.5. The euro-dollar pair is very interesting in the sense that we have very choppy action on the daily chart, but when you switch over to the weekly chart, it's a different story. You can see that 133 is, of course, support, and we have formed three hammers in a row. The markets have just opened for the week, and you can see that we're just kind of meandering around. Three hammers in a row is a very rare thing to see. It generally means that we are going to see significant support and perhaps a bounce. I think 135, though, really is about as far as we can go in the meantime. Any type of pullback should bring in buyers. 135 really, again, is about as far as I would anticipate this market going. The S&P 500, I mentioned that as possibly being affected by the housing numbers out of the U.S., but it's just a confidence number, really. So there's only so much that you can get out of it, really. Now, looking at the S&P 500, the interesting thing is that Friday we had the reports of firing in the eastern Ukraine, and the markets, as you can see, initially gapped higher and then kept going higher and then sold off rather drastically. 1940 was an area where a lot of support came into play, and we turned back around and formed a hammer. That to me tells me every time this market falls, there will be buyers. So I'm actually looking to buy on pullbacks if I get that opportunity. Another chart that's caught my attention is oil. It's bounced nicely back above the 96.5 level. Above 98.5, we go much higher. This is a market that looks like it's trying to find a base down here. Expect choppy conditions, but quite frankly, probably one that you will want to play longer term options with a little bit of buoyancy expected. That being said, though, if we break down below 95, the whole thing looks like it's ready to fall apart and head down to 90. With that being said, I've looked at the August 18th Monday trading session. Very technical in nature, not a whole lot economic announcement-wise.